Good afternoon, everyone, and welcome to the first webinar for Brady Ware Dealership Advisors Group for 2020, a new decade, a new year. So we're excited to kick it off this month. This month's topic, as advertised, is safeguarding your dealership. We often see a lot of transactions, a lot of dollars flowing through dealerships now, especially with the increased cost of vehicles. So there's a lot of dollars, a lot of cash flowing through stores. And and having some good reminders and some best practices over some controls to both prevent fraud and detect fraud sometimes. So this month we have our own Randy Domigan, who's heads up the fraud practice for our dealership group. He's going to be speaking to us on some best practices of internal controls and safeguarding your dealership. So with that, I'll turn it over to Randy.
Great, thanks so much, Sam. Good afternoon, everyone. As Sam said, my name is Randy Domigan. I'm a director here at the firm with our Dealership Advisors Group. I'm a certified public accountant and a certified fraud examiner. And as Sam said, I head up our fraud and forensics practice here at Brady Ware. Thank you all for joining me today. I wanted to start out today by reading some headlines in the news about some of your fellow car dealers. One headline reads, "Dealership controller embezzles 1.1 million. Employees at a BMW store sentenced to 2.5 years." In this case, a former controller stole more than $1.1 million in less than 3 years. Next headline reads, "An ex-employee drives $2 million, embezzlement at an auto dealership. Trust but verify. A former assistant comptroller has been convicted of embezzling $2 million from a South Carolina auto dealer. The ex-employee used the stolen money to pay for a lavish lifestyle, including furniture, jewelry, vehicles, and even the down payment on a house for her daughter." The next headline reads, "A former manager of Marin County auto dealer gets 4.5 years in prison for embezzling $6.6 million. Now, some of these cases are extreme because that's why they make the headlines. They sell newspapers and clicks on the internet. But unfortunately, this kind of fraud happens all the time. One thing I want you to keep in mind is these are only the reported cases of fraud that are making these headlines. Unfortunately, many frauds go unreported to law enforcement because the dealership doesn't want the bad publicity. Many times, the dealership will work out a deal with the former employee for restitution, or they get some kind of insurance reimbursement, and that person is able to go on and steal from somebody else because it never gets reported. So one of the reasons today we're talking about this is because, unfortunately, fraud is rampant in a lot of companies. And if you don't have some of these things we're going to talk about in place, can really be a detriment to your dealership. The next slide shows that for companies with under 100 employees, the average cost per occurrence of fraud is $200,000. Now, this comes from a report that's published by the Association of Certified Fraud Examiners, their 2018 report to the nations, which is a global study on occupational fraud and abuse. The ACFE publishes this report every couple years to report on different types of fraud all over the world in various industries. If you've never read one of these reports, I would encourage you to go out to their website and download a copy. It's really fascinating and it's very eye-opening for business owners. An overview of what we're going to talk about today is internal fraud, which is really the most prevalent fraud for a lot of dealerships, which include asset misappropriation. We're going to talk about some common weaknesses in internal controls. We're going to talk about some motivating factors, why employees would choose to steal, things to look for. We're going to talk a little bit about Treasury fraud, and then, of course, ways to prevent. Some of the categories within internal fraud include skimming. Skimming is really just taking cash prior to entering it in the accounting system. For a dealership, this could be something like taking a down payment from a customer and then reporting a lower amount and adjusting it through the deal. The next is a billing scheme. This is where fictitious or inflated invoices for goods or services are presented to the company and then the company pays for them. This is how the guy who stole $6.6 million did it in the article I referred to earlier. He submitted and approved fictitious invoices for advertising, and the dealership paid him. Cash larceny is another one. That's really just the theft of cash that's already been accounted for from the accounting system. This would really be just taking cash out of the cash drawer. Expense reimbursement schemes are where an employee makes a claim for reimbursement of a fictitious or inflated business expense. This could include personal expenses that are claimed as business expenses also. Payroll schemes are the theft of cash from a business using the payroll system. This could include putting a fake employee on the payroll, giving yourself an unauthorized pay increase, or making advances that are never paid back. The other is check tampering scheme. This is a pretty common scheme and one that's frequently committed. This is where an employee steals a check by intercepting it, forging it. They can alter it, just any check that's drawn on the company's bank account. It can also be as simple as somebody writing a check to themselves and either using a signature stamp or simply signing the check themselves because they're a check signer. Some common weaknesses we're going to talk about in receivables are really just failure to segregate the accounting functions dealing with cash and receivables. A simple one is just having the same person receiving the payments that can adjust receivables. If I'm responsible for taking all the cash in, but if I want to divert some of that cash and adjust the receivable, and I have the ability to do that, that shouldn't happen in the same system. On the accounts payable side, if I am putting new vendors in and I can approve invoices or even potentially sign checks, that can be problematic. The fraud here would be if I introduce a fictitious vendor or invoice into the accounting system, and we just have a system that, once the invoice comes in and it's approved, it goes ahead and gets paid. So those are some different things you want to look at if you're looking at how to better control some of these things in your accounting system. Some motivating factors, really the reason why employees commit fraud are listed here on this slide. One of the biggest things is an employee living beyond the means that they have in their current pay. They want to live a more lavish lifestyle, so they have to find a way to fund that. Another could be medical bills. This could be medical bills for themselves or for a loved one. And obviously this can be a very high motivating factor for somebody who is sick and has a zest for life and just wants to overcome whatever medical situation that they have. Another is just somebody with poor personal credit. You really don't want somebody, writing thousands and thousands of dollars out of the dealership's checking account with a credit score of 400. It's just something you really want to look into before you put people in these positions of trust. Another could be a bankruptcy. Again, this goes back to poor personal credit, but if you have somebody that's filed bankruptcy, again, that could be a motivating factor for them to not be able to get credit, so they have to find other ways to fund their lifestyle. Another could be a recent divorce. Unfortunately, a lot of times when somebody goes through a divorce, it can be very financially straining to them. These are all things you should be aware of if your employees are going through any of these things and they have access to any of the funds within the dealership. Some other factors to look at are just vices. One could be if you have an employee that's abusing alcohol. Another could be drug use. I've seen cases where somebody was abusing prescription medication, and once the doctor finally figured out what was going on and they cut them off, they had to find an illegal way to obtain the drugs because they were addicted. And that cost a lot of money, so they went to the dealership to find a way to fund it. Extramarital affairs are another vice. Somebody needs to find a way to fund the person they have on the side and take them out to dinner, go on trips and do things like that and try to hide it from their spouse. A big one is gambling. People who are addicted to gambling have to find ways to fund that. And so if they have an opportunity within the dealership and they see that they can take money out of it to help fund their habit, they're going to do it. Another can be somebody that's dissatisfied with their job. If you have employees that feel unappreciated, they don't feel they're respected, they feel like they're not paid well, maybe they didn't get a great raise this year, they feel they're being treated unfairly, or maybe they have poor relationships with their supervisors and coworkers. These can all be potential things that can drive someone to commit fraud. Some other factors are just plain greed. Can be really the challenge to just get away with it. Could be pressure from family or friends. I had one case where a person was working for a bank, and her husband started a business on the side and it wasn't doing well, so she was quote unquote borrowing money from the bank to help fund that to get it off the ground without the bank's knowledge, and eventually she was caught. Could be potential pressure from co-workers. This is what's called collusion, where you have two people working within the dealership to commit fraud. So unfortunately, collusion, the best controls that are set up with segregation of duties can be overridden through collusion. I want to talk just a little bit about Treasury fraud, because this is one that unfortunately happens a lot. Check fraud is one I've already talked about a little bit. ACH fraud is another one. A lot of dealers don't realize how many different ways there are to get money out of their company checking accounts. ACH is automated clearinghouse, and that basically is a way to send money out electronically out of the account. So if there are not proper controls set up on this, let's just say you sign all the checks in your dealership, but your controller or bookkeeper or somebody else who kind of takes care of all your banking and bank reconciliations and things like that has online banking access, and they have the ability to send out ACHs. Just because you sign all the checks doesn't mean that they can't still move money out of the account without your knowledge. Same thing on a wire transfer fraud. Wire's just a different form of electronic money movement out of your account. And if somebody has the ability to do this without any second authorization or anything else, it's very easy to move money out, especially if they have access to the accounting system and they can go in and cover it up. One point I want to make is what I just mentioned. Even if the owner signs all the checks, fraud can still occur with check disbursements. The banks have really put out a lot of different services that can help prevent fraud. So that these different treasury controls I'm going to talk about are really bank offered products. Lockbox service is one that really wouldn't be as useful for a dealership. That's where any checks that are coming in that are getting mailed to the dealership would go to a central repository, so it actually never comes in the dealership for anybody to have their hands on. So the bank actually receives the check, they actually put it in the account for you because it goes to a PO box. Merchant capture is another one where you actually can scan all your checks in and deposit them directly from your dealership. Positive pay is a good one that I know a lot of companies will put in place. This basically prevents more outside fraud from occurring than inside fraud. It basically prevents somebody from getting your bank account information with your routing number and your bank account number and creating a fake check, or finding a check that you've already written for something else and modifying the check and trying to send it through and cash it. What Positive Pay does, it tells the bank all the checks that you've written so they know what to expect when it comes back through the account. So if you write a check for $500 out to ABC Company, if somebody tries to change that to $500,000 and send it back through and they change the payee on it, it's going to get flagged because that wasn't one that you told the bank that you wrote. ACH Positive Pay is similar to check Positive Pay, except it's done with ACHs. So anything that you're paying would have to be pre-authorized by the bank. Again, they've got some other things with ACH control, wire transfer controls that you would put in place just to make sure you have dual authorizations set up before any money can go out of the dealership. Getting your bank statements sent to somebody else, preferably you, just so you're looking at them and you can question things before they go directly to accounting, is also a good way to have a treasury control in place. We're going to talk a little bit about prevention now. It's amazing how much management tone at the top can impact employees perpetrating fraud within the dealership. Management that really sets good examples, are supportive and respectful of employees, can really go a long way in preventing fraud from occurring in the first place. Another good prevention measure is just making sure you've got good internal controls. Segregation of duties, and basically what that means is you just don't have people doing things where they can, have the opportunity to steal. You obviously want to trust your employees. I'm not suggesting that you don't do that, but you need to verify information and you need to make sure you're protecting the employee as well by not giving them the opportunity to potentially steal. If there's a high chance of detection, that will deter fraud from occurring to begin with. And basically what that means is if you're checking up on things and you're asking questions or you're having a third party come in and review things, that means that you're potentially going to catch something if it's already happened. Now, may not prevent it on the front end, but if you catch it early, it's going to prevent some of these huge frauds from occurring, like I talked about at the very beginning, especially the one for $6.6 million. Management review of the financial statements, again, questioning things of your accounting folks and really just making sure that that they know you're looking at things is a huge prevention measure to deterring fraud. Other things you may want to consider, looking at mandatory vacations. If you have employees that do payroll and nobody else ever does payroll, and I understand that because it's something you don't want to get around the whole company, but you should have your payroll people take mandatory vacations and have somebody else perform the payroll function. Making sure you're doing background checks of employees. Now, unfortunately, when I talked at the very beginning of the webinar that sometimes these crimes go unreported, the ones that are reported though will get picked up through background checks normally. So make sure you're doing background checks of employees, especially if they're going to be or have access to your accounting system, a lot of the money flowing through the dealership. Fidelity bonding of employees is another big thing, making sure that they're able to get a bond because the bonding company will also do a check on them, but they will bond them up to a certain dollar amount. So if they do steal from you, then you'll be able to get reimbursed through the bond. Also making sure you have insurance in place that covers fraud. That's usually pretty cheap from your insurance company, so if you don't have that on your current policy, it's something you want to look for. An anonymous tip hotline is a huge way that fraud can get reported. Most employees will know about fraud occurring within your dealership. Unfortunately, they don't have a means of talking to anybody about it, and a lot of times they'll feel retribution if they do. So if you have an anonymous tip hotline or a way that people can report things, that's where actually a lot of frauds get reported, because if an employee sees somebody else doing something, whether they're stealing parts or taking something that doesn't belong to them, that they feel that that's not fair, and so a lot of times it'll get reported. One thing just to make sure is be open to possible whistleblowers who might be trying to give you anonymous information. If you have somebody that has mentioned something kind of casually, be aware of that. A lot of times employees don't want to come right out and say something, so they may mention something in passing or say, hey, have you looked at this? Just be open to those things and be aware of them. And then really just look for possible systems or control problems. if you know you have somebody that can do everything in your accounting system, and I understand sometimes it's just not possible to hire additional help to do that, but there are some very practical things you can do to put procedures and processes in place that help prevent and deter fraud. And that's something that if you have more questions on that, I can talk to you one-on-one more about your personal situation. But there are a lot of ways you can do that without just adding people to your payroll. Other things to look for, if you have customers complaining, if you're sending notices out and saying, hey, why haven't you paid this? And they said, hey, I did pay it. Or you're having vendors say, hey, this is past due or this hasn't been paid. If you have shrinkage in your parts department, you do a physical count and you're short several $1,000s in parts. If you're looking at your financial trends and something doesn't make sense. It's like, hey, we should be making more money than this. I don't understand why the dealership isn't more profitable than what it is. In fact, one of the cases that I mentioned at the very beginning, the controller was saying, oh, things are going to get better, and she was the one stealing from them, and they were doing all kinds of things and changing pay plans and making modifications within the dealership because they thought they should be more profitable, and they said, okay, we need to become more profitable. None of the changes that they made really did any good because she was stealing it. If you have abrupt changes in employees' behavior or lifestyle, you start seeing them dress differently, wearing designer clothes, designer purses, driving in a vehicle that's not the dealership, something that's very expensive, or hearing about trips that they're taking that really doesn't make sense that they're able to afford some of those things. Be aware of those things. And that goes along with employees living beyond their means. Again, you hear about things that they're doing, or employees are saying, oh yeah, did you hear that so-and-so went to, on this extravagant trip or this cruise or something, and they take multiple of these trips throughout the year. Those are things that might want to draw your attention to that. One thing I always like to point out is just keep in mind that in connection with the preparation of your tax return and financial statements, if you have an outside CPA that does that, they are not required to consider fraud unless they're providing audit services. So if you don't have an audit performed on your books, fraud is not really being considered, even if you have a review or a compilation done by your CPA. Unless you specifically have procedures done to look at fraud and where you've got risks, where you potentially could have fraud occur, chances are that this stuff isn't going to get caught. Unfortunately, only about 4% of frauds were detected through an external audit in the ACFE study that they performed. So having good internal controls are really critical to protecting your dealership and its assets. I think that is the last slide that I had. I want to thank you all for your time today. My contact information is there on the screen if you have any questions about fraud, or if you'd like to set up a time to discuss your personal situation in more detail, please feel free to reach out. Sam, I'm going to turn it over back to you.
Thank you, Randy. Very good points raised, and a lot of good information there. We did have a couple questions emailed into us, and one is, as most dealers is, they talk about the control. One is asking about the controller signing checks. What's your thoughts on that?
Yeah, no, that's a great question, Sam. I get that from dealers a lot, but unfortunately, your controller will typically have full access to your accounting system where they can go in, make journal entries. A lot of times they're doing the bank reconciliation, and they are very actively involved in your accounting system. So it's not a good idea to have that person signing checks unless you have other controls in place where somebody's looking at all those checks that have been written and comparing them and making sure that fraudulent checks aren't being written out. So yeah, I get that a lot, but it's one thing that you really should not have anybody that is able to modify anything in your accounting system as a check signer. But no, great question.
Thank you, Randy. We've got one more question here. Is Sounds like you guys are in a lot of dealerships. Where do you see the fraud occurring the most? Where are some hot areas?
Yeah, so that's a great question, Sam. The billing scheme is a big one where fictitious invoices can be entered into the accounting system and get paid. That one fraud I was talking about at the very beginning on the $6.6 million, that person was a general manager at that dealership, and he had friends that had these side companies set up where he would, get these fictitious invoices, get them approved, send them through, the dealership would pay them. Once they went to these accounts of these friends, the friends would pay the majority of that money back to the person who gave it to them. So they'll take a small cut off the top, but I mean, this person got other people involved, but they could very have easily done that themselves and set up, false companies to do that. Simply writing checks to themselves, where an employee either has a signature stamp or they can sign checks themselves, and they're doing the bank reconciliation themselves, and no one's really checking in on that stuff. People will just simply write checks out to themselves, and there's no watch or anything else on that. And so that's been another big way where I've seen fraud occur inside the dealerships. And cash receipts fraud is another one. And, a lot of dealers have pretty good control set up around cash receipts. But, I've seen it happen where, something will come in on a deal and maybe there's, cash payment with it. And the person who is, whether it's the controller or somebody else in accounting, gets their hand on that money that has the ability to go in and modify the accounting system and somehow hide it through, another account within the accounting system, and, change the deal to make it look like the cash was received. There's just a number of ways that can happen. So on the cash receipt side, you really need to make sure, there's only a very limited number of people that get their hands on that cash, so they don't have the opportunity to take it.
Thanks, Randy. One area I would add that I see a lot of is around the procurement of used cars and dealing with wholesalers. That's an area you got to be really cautious of guys getting kickbacks and things like that and getting buried with used car inventory.
Absolutely.
So that's an area, does involve cash, but I see that a lot around the wholesalers and procurement used cars. So something to be aware of. Also add in there, Brady Ware, Randy talked about deterrence and not always detection sometimes, but Brady Ware has a proprietary program called SAFE, which is an acronym for Secure Automotive Financial Environment. It consists of some modules where we come in and we act as that deterrent and looking and reviewing things, and on a monthly basis, it kind of functions as an internal audit department to some degree. So just keep that in mind if you ever have any needs. And like Randy said, his contact info is on the last slide. Feel free to reach out to him with questions or concerns. And Randy will be sure to help you out on that. And I want to thank everyone for tuning in to this month's webinar. And hopefully join us next month where we're going to be discussing F&I solutions and the importance of that as a profit center to your dealership. So look forward to seeing everyone next month. Thank you.